Welcome to this exam review from Birdsy, your AI-powered study partner. Be sure to like and subscribe for more exam prep videos. Let's get started.
Let's start with a review of core property and casualty insurance concepts. Risk and hazards. What is the primary purpose of risk assessment in risk management? Is it A, to eliminate all risks, B, to identify and evaluate potential risks, C, to ensure compliance with regulations, or D, to increase profitability? The answer is B, to identify and evaluate potential risks. Risk assessment aims to identify and evaluate potential risks to minimize their impact. It involves analyzing the likelihood and consequences of risks. Which of the following best describes a hazard in the context of risk management? Is it A, a situation that has already caused harm, B, the likelihood of a negative event occurring, C, a potential source of harm, or D, a measure of the impact of an event? The answer is C, a potential source of harm. Why this question may seem a bit tricky: hazards are often confused with risks, but they specifically refer to potential sources of harm. A construction company is planning a new project near a river. What should they primarily assess to manage flood risks effectively? Is it A, the likelihood and potential impact of flooding, B, the cost of flood insurance, C, the historical data of river water levels, or D, the availability of emergency services? The answer is A, the likelihood and potential impact of flooding. The company should assess the likelihood and potential impact of flooding to implement effective risk management strategies. What is a key difference between a risk and a hazard? Is it A, a risk is always more severe than a hazard, B, a hazard is a consequence of a risk, C, a risk is a potential source of harm, or D, a risk involves likelihood and impact, while a hazard is a potential source of harm? The answer is D. A risk involves likelihood and impact, while a hazard is a potential source of harm. A risk involves the likelihood and impact of a hazard, which is a potential source of harm. During a safety audit, a factory identifies a machine that could cause injury if not properly maintained. What is this machine considered in risk management terms? Is it A, a risk, B, a hazard, C, a liability, or D, an incident? The answer is B, a hazard. The machine is a hazard because it is a potential source of harm if not maintained.
Notice the code in the corner. When you're stumped by a question, enter it at birdsy.ai for immediate help. Enjoy complimentary study sessions and access to hundreds of additional questions to help you pass your exam with confidence.
What is the primary goal of hazard identification in risk management? Is it A, to eliminate all risks completely, B, to recognize potential sources of harm, C, to ensure compliance with regulations, or D, to assess the financial impact of risks? The answer is B, to recognize potential sources of harm. Hazard identification aims to recognize potential sources of harm in order to prevent accidents and reduce risks. Which of the following best describes a risk in the context of risk management? Is it A, a potential source of harm, B, the certainty of a negative outcome, C, an unavoidable event, or D, the potential for loss or harm? The answer is D, the potential for loss or harm. Why this question may seem a bit tricky: risk involves the potential for loss or harm, not just the presence of a hazard. A manufacturing plant is located near a fault line. What should the management primarily focus on to manage earthquake risks? Is it A, conducting regular fire drills, B, increasing insurance coverage, C, implementing structural reinforcements, or D, relocating the plant? The answer is C, implementing structural reinforcements. Management should focus on implementing structural reinforcements to minimize damage during an earthquake. What is a key characteristic of a hazard in risk management? Is it A, potential to cause harm, B, guaranteed to cause harm, C, always visible and identifiable, or D, easily eliminated? The answer is A, potential to cause harm. A hazard is characterized by its potential to cause harm or adverse effects. During a risk assessment, a company identifies that its data servers are vulnerable to cyber attacks. What should be their immediate focus to mitigate this risk? Is it A, relocating the data servers, B, implementing robust cybersecurity measures, C, increasing physical security, or D, conducting regular fire drills? The answer is B, implementing robust cybersecurity measures. Implementing robust cybersecurity measures is crucial to protect against cyber attacks. What is the primary focus of hazard identification in risk management? Is it A, assessing the likelihood of an event occurring, B, recognizing potential sources of harm, C, implementing control measures, or D, evaluating the effectiveness of existing controls? The answer is B, recognizing potential sources of harm. Hazard identification aims to recognize potential sources of harm or adverse health effects. It is the first step in risk management, focusing on identifying what could potentially cause harm. A chemical plant is located near a residential area. What should the management primarily focus on to manage the risk of chemical leaks? Is it A, increasing production efficiency, B, enhancing employee training programs, C, implementing containment and emergency response plans, or D, reducing the number of employees on site? The answer is C, implementing containment and emergency response plans. The management should focus on implementing robust containment and emergency response plans to prevent and mitigate the impact of chemical leaks on the nearby residential area. Insurable interest and indemnity. What is the primary purpose of the principle of indemnity in insurance? Is it A, to provide a profit to the insured, B, to restore the insured to their pre-loss financial position, C, to ensure the insurer makes a profit, or D, to cover all possible losses without limits? The answer is B, to restore the insured to their pre-loss financial position. The principle of indemnity ensures that the insured is restored to their financial position prior to the loss, preventing profit from the insurance claim. In insurance, when is insurable interest required to exist? Is it A, only at the time of policy inception, B, only at the time of policy renewal, C, both at inception and renewal, or D, at the time of the loss? The answer is D, at the time of the loss. Why this question may seem a bit tricky. Insurable interest must exist at the time of the loss for property insurance, not necessarily at the time of policy inception. John has a fire insurance policy on his home. After a fire, he receives a payout equal to the cost of repairs. What insurance principle is being demonstrated? Is it A, subrogation, B, insurable interest, C, indemnity, or D, contribution? The answer is C, indemnity. The scenario illustrates the principle of indemnity, where John is compensated to restore his home to its pre-loss condition without profiting. What does insurable interest insure in an insurance contract? Is it A, the policyholder has a legitimate interest in the insured item, B, the insurer profits from the policy, C, the policyholder can insure any item they choose, or D, the policyholder receives a payout regardless of loss? The answer is A, the policyholder has a legitimate interest in the insured item. Insurable interest ensures that the policyholder has a legitimate interest in the insured item, preventing insurance as a form of gambling. Sarah insures her neighbor's car without their knowledge. If the car is damaged, can Sarah claim indemnity? Is it A, yes, because she has a policy? B, no, because she lacks insurable interest? C, yes, if she pays the premiums? Or D, no, unless she is listed as a driver? The answer is B, no, because she lacks insurable interest. Sarah cannot claim indemnity because she lacks insurable interest in her neighbor's car, which is necessary for a valid claim.
Finding this exam review helpful? If you haven't already, like and subscribe for more videos that'll get you ready to pass.
What is the principle of indemnity primarily designed to prevent in insurance contracts? Is it A, ensuring all claims are paid promptly? B, preventing the insured from profiting from a loss? C, guaranteeing coverage for all types of losses? Or D, reducing the cost of premiums? The answer is B, preventing the insured from profiting from a loss. The principle of indemnity ensures that the insured does not profit from a loss, maintaining fairness and preventing moral hazard. In what situation would insurable interest be irrelevant to an insurance contract? Is it A, when the policyholder is a minor? B, when the policy is for a business asset? C, when the policy is a life insurance policy and the insured has died? Or D, when the policyholder is also the beneficiary? The answer is C, when the policy is a life insurance policy and the insured has died. Why this question may seem a bit tricky. Insurable interest is always relevant at the time of contract initiation, but not necessarily at the time of loss in life insurance. Emily insures her friend's artwork collection, which she does not own, and the collection is later damaged. Can Emily claim indemnity? Is it A, yes, because she paid the premiums? B, yes, because she has a valid policy? C, no, because the damage was intentional? Or D, no, because she does not have insurable interest? The answer is D, no, because she does not have insurable interest. Emily cannot claim indemnity because she lacks insurable interest in the artwork, as she does not own or have a financial stake in it. When must insurable interest exist in a property insurance contract? Is it A, at the time of the loss? B, at the time of policy renewal? C, at the time of policy cancellation? Or D, at the time of policy purchase? The answer is A, at the time of the loss. In property insurance, insurable interest must exist at the time of the loss to ensure the insured has a legitimate claim. Tom insures his car and later sells it to Lisa without transferring the insurance. If the car is stolen, who can claim indemnity? Is it A, Tom because he purchased the policy? B, Lisa because she owns the car? C, neither, because the insurance was not transferred? Or D, both, because they have a shared interest? The answer is C, neither, because the insurance was not transferred. Tom can no longer claim indemnity as he sold the car and lacks insurable interest. Lisa cannot claim because the insurance was not transferred. Loss valuation methods. What is the primary purpose of using the replacement cost method in loss valuation? Is it A, to cover the cost of replacing damaged property without depreciation? B, to account for the depreciation of the damaged property? C, to determine the market value of the property at the time of loss? Or D, to provide a cash payout based on the original purchase price? The answer is A, to cover the cost of replacing damaged property without depreciation. Replacement cost aims to cover the cost of replacing damaged property with new property of similar kind and quality without considering depreciation. In loss valuation, why might actual cash value result in a lower payout than replacement cost? Is it A, because ACV accounts for the cost of new materials? B, because ACV includes depreciation of the property? C, because ACV is based on the original purchase price. Or D, because ACV is calculated using the market value. The answer is B, because ACV includes depreciation of the property. Why this question may seem a bit tricky. ACV includes depreciation, which reduces the payout compared to replacement cost, which does not consider depreciation. John's house was damaged in a storm, and his insurance policy uses the functional replacement cost method. What does this mean for his claim? Is it A, he will receive the full cost to replace his house with identical materials? B, he will receive the market value of his house at the time of loss? C, he will receive the depreciated value of his house? Or D, he will receive the cost to replace his house with materials that serve the same function? The answer is D. He will receive the cost to replace his house with materials that serve the same function. Functional replacement cost covers the cost to replace with a functionally equivalent item, not necessarily identical, which can be cheaper. Which loss valuation method considers the cost to repair or replace property with materials of like kind and quality minus depreciation? Is it A, replacement cost, B, functional replacement cost, C, actual cash value, or D, agreed value? The answer is C, actual cash value. Actual cash value considers the replacement cost minus depreciation, reflecting the property's current value. Sarah's antique vase was destroyed in a fire, and her policy uses the agreed value method. What should she expect from her insurance claim? Is it A, she will receive the current market value of the vase? B, she will receive the pre-agreed value of the vase? C, she will receive the replacement cost minus depreciation? Or D, she will receive the cost to replace the vase with a similar new one? The answer is B, she will receive the pre-agreed value of the vase. Agreed value means the insurer and insured have predetermined the value of the item, which is paid out in full, regardless of depreciation. What is the primary characteristic of the replacement cost method in loss valuation? Is it A, it considers the market value of the property? B, it reimburses the cost to replace the property without depreciation? C, it uses the original purchase price of the property? Or D, it calculates the value based on future appreciation? The answer is B, it reimburses the cost to replace the property without depreciation. The replacement cost method involves reimbursing the policyholder for the cost to replace the damaged property with a new one of similar kind and quality without considering depreciation. In loss valuation, what does the actual cash value method primarily account for? Is it A, depreciation of the property? B, the cost to replace the property with new materials? C, the sentimental value of the property? Or D, the original purchase price of the property? The answer is A, depreciation of the property. Why this question may seem a bit tricky. ACV is often confused with replacement cost. ACV accounts for depreciation, which reduces the payout compared to replacement cost. Emily's vintage car was damaged in an accident, and her insurance policy uses the stated value method. What should she expect from her claim? Is it A, she will receive the full replacement cost of a new car? B, she will receive the market value of a similar vintage car? C, she will receive the lesser of the stated value or the actual cash value? Or D, she will receive the original purchase price of the car? The answer is C, she will receive the lesser of the stated value or the actual cash value. The stated value method pays the lesser of the stated value or the actual cash value at the time of loss, which may be less than the replacement cost. Policy elements: deductibles, limits, and coinsurance. What is the primary purpose of a deductible in an insurance policy? Is it A, to reduce the insurer's risk and encourage fewer claims? B, to increase the overall premium cost. C, to eliminate the need for coinsurance. Or D, to provide unlimited coverage. The answer is A, to reduce the insurer's risk and encourage fewer claims. A deductible is the amount the policyholder must pay out of pocket before the insurance company pays a claim. It helps reduce the insurer's risk and encourages policyholders to avoid small claims. How does coinsurance typically affect the payout of a claim? Is it A, it covers the entire claim amount after the deductible? B, it requires the policyholder to pay a percentage of the claim? C, it eliminates the need for a deductible? Or D, it increases the policy's coverage limits? The answer is B, it requires the policyholder to pay a percentage of the claim. Why this question may seem a bit tricky. Coinsurance requires the policyholder to pay a percentage of the claim amount, which can be confused with deductibles that are fixed amounts. John's insurance policy has a $1,000 deductible and a 20% coinsurance clause. If he incurs a $5,000 covered loss, how much will John pay out of pocket? Is it A, $1,000, B, $1,200, C, $1,800, or D, $2,000? The answer is C, $1,800. John pays the $1,000 deductible first, leaving $4,000. With 20% coinsurance, he pays 20% of $4,000, which is $800. Total out-of-pocket is $800.
Notice the code in the corner? When you're stumped by a question, enter it at Birdsy.ai for immediate help. Enjoy complimentary study sessions and access to hundreds of additional questions to help you pass your exam with confidence.
What is the effect of policy limits on an insurance claim? Is it A, they increase the deductible amount? B, they eliminate the need for coinsurance? C, they guarantee full coverage of any loss? Or D, they cap the maximum payout for a covered loss? The answer is D, they cap the maximum payout for a covered loss. Policy limits cap the maximum amount an insurer will pay for a covered loss. Any costs exceeding this limit must be paid by the policyholder. Sarah's insurance policy includes a $500 deductible and a $10,000 limit. If she files a claim for $12,000, how much will the insurance company pay? Is it A, $12,000, B, $9,500, C, $10,000, or D, $11,500? The answer is B, $9,500. The insurer pays up to the $10,000 limit after Sarah pays the $500 deductible, so the insurer pays $9,500. What is the primary function of a deductible in an insurance policy? Is it A, to increase the policyholder's premium? B, to reduce the insurer's risk by sharing costs with the policyholder? C, to eliminate the need for coinsurance? Or D, to ensure full coverage of all claims? The answer is B, to reduce the insurer's risk by sharing costs with the policyholder. A deductible is the amount the policyholder must pay before the insurance company pays its share. It helps reduce the number of small claims and lowers the insurer's risk. How does a coinsurance clause typically affect the payout of an insurance claim? Is it A, it limits the maximum payout by the insurer? B, it eliminates the need for a deductible? C, it requires the policyholder to pay a percentage of the claim amount? Or D, it increases the policyholder's premium? The answer is C, it requires the policyholder to pay a percentage of the claim amount. Why this question may seem a bit tricky. Coinsurance requires the policyholder to pay a percentage of the claim amount, which can be confused with deductibles or limits. Emily's insurance policy has a $2,000 deductible and a 10% coinsurance clause. If she incurs a $10,000 covered loss, how much will Emily pay out of pocket? Is it A, $1,000, B, $2,000, C. 2200s, or D. 2800s? The answer is D. 2800. Emily pays the $2,000 deductible first. Then she pays 10% of the remaining $8,000, totaling $800. Her total out-of-pocket cost is $2,800. Mark's insurance policy includes a $500 deductible and a $15,000 limit. If he files a claim for $16,000, how much will the insurance company pay? Is it A. $14,500, B. $15,000, C. $15,500, or D. $16,000? The answer is A. $14,500. The insurer pays up to the policy limit of $15,000. Mark pays the deductible and any amount over the limit. Occurrence versus accident and proximate cause. What is the primary difference between an occurrence and an accident in insurance terms? Is it A. An occurrence is always intentional, B. An accident is a sudden, unforeseen event, C. Occurrences are always covered by insurance, or D. An accident involves multiple events over time? The answer is B. An accident is a sudden, unforeseen event. An occurrence refers to an event that results in a loss, which can be continuous or repeated exposure to conditions, while an accident is a sudden, unforeseen event. In insurance, how does the concept of proximate cause affect claims? Is it A. It identifies the first event in a sequence, B. It always results in claim denial, C. It determines the main cause of the loss, or D. It is irrelevant to policy coverage? The answer is C. It determines the main cause of the loss. Why this question may seem a bit tricky. Proximate cause is the primary cause of loss, not necessarily the first event in a sequence. It determines if the loss is covered. John's house was damaged by a fire that started due to faulty wiring. The insurance company is assessing the claim. What concept will they primarily consider? Is it A. Proximate cause, B. Occurrence, C. Accident, or D. Policy exclusions? The answer is A. Proximate cause. The insurance company will focus on the proximate cause, which in this case is the faulty wiring that directly led to the fire. Which term describes a continuous or repeated exposure to conditions resulting in a loss? Is it A. Accident, B. Proximate cause, C. Exclusion, or D. Occurrence? The answer is D. Occurrence. An occurrence can involve continuous or repeated exposure to conditions that result in a loss. A storm causes a tree to fall on Sarah's car, which was parked in her driveway. What insurance concept will determine if her policy covers the damage? Is it A. Accident, B. Occurrence, C. Proximate cause, or D. Exclusion? The answer is B. Occurrence. The concept of occurrence will determine coverage as it involves an event leading to damage. What is the primary focus of the proximate cause principle in insurance claims? Is it A. The first event in a chain of events leading to a loss, B. The most direct and efficient cause of the loss, C. The last event before the loss occurred, or D. Any contributing factor to the loss? The answer is B. The most direct and efficient cause of the loss. Proximate cause determines the primary cause of a loss in an insurance claim, focusing on the most direct and efficient cause. It is not about the first or last event, but the most significant one. In a situation where multiple events lead to a loss, which event does the insurance company consider under the occurrence definition? Is it A. The initial event that started the chain, B. The final event that caused the damage, C. The entire series of events leading to the loss, or D. Any single event within the chain? The answer is C. The entire series of events leading to the loss. Why this question may seem a bit tricky. The term occurrence can be confused with accident. It refers to the entire series of events leading to a loss, not just a single event. After a severe storm, a tree falls on Mark's house, causing significant damage. The insurance company is evaluating the claim. What concept will they primarily consider to determine coverage? Is it A, proximate cause, B, occurrence, C, accident, or D, contributory negligence? The answer is A, proximate cause. The insurance company will focus on proximate cause to determine if the storm directly caused the damage, which is crucial for coverage decisions. Liability and contract law. Negligence liability types. What is the primary difference between negligence and strict liability? Is it A, negligence applies only to intentional acts? B, negligence requires proof of fault, strict liability does not? C, strict liability is only applicable to criminal cases? Or D, negligence always results in punitive damages? The answer is B, negligence requires proof of fault, strict liability does not. Negligence requires proof of a breach of duty, while strict liability does not require proof of fault or negligence. In a negligence claim, which element is typically the hardest to prove? Is it A, duty of care, B, breach of duty, C, causation, or D, damages? The answer is C, causation. Why this question may seem a bit tricky. All elements are crucial, but causation often involves complex evidence to link the breach directly to the harm. A customer slips on a wet floor in a store despite a warning sign. What type of liability might the store face? Is it A, premises liability, B, product liability, C, vicarious liability, or D, strict liability? The answer is A, premises liability. The store could face premises liability as they are responsible for maintaining safe conditions for customers. Which of the following is a defense against a negligence claim? Is it A, strict liability, B, vicarious liability, C, assumption of risk, or D, contributory negligence? The answer is D, contributory negligence. Contributory negligence is a defense where the plaintiff's own negligence contributed to their harm. A manufacturer sells a toy that breaks easily and injures a child. What type of liability might they face? Is it A, premises liability, B, product liability, C, vicarious liability, or D, negligence per se? The answer is B, product liability. The manufacturer might face product liability for selling a defective product that caused harm. What is the primary element required to establish negligence in a liability case? Is it A, intent to harm, B, duty of care, C, breach of contract, or D, strict liability? The answer is B, duty of care. The duty of care is the primary element required to establish negligence. It refers to the obligation to avoid causing harm to others. A homeowner hires a contractor to repair a roof, but the contractor fails to secure the ladder, causing it to fall and injure a passerby. What type of liability might the contractor face? Is it A, strict liability, B, vicarious liability, C, negligence liability, or D, product liability? The answer is C, negligence liability. The contractor may face negligence liability for failing to secure the ladder, which directly caused the injury. Warranties, representations, concealment. What is the primary difference between a warranty and a representation in contract law? Is it A, a warranty is always legally binding, while a representation is not? B, a warranty guarantees facts, while a representation is a statement to induce a contract? C, a representation is a promise of future performance, while a warranty is a statement of past facts? Or D, warranties are only found in insurance contracts, while representations are in all contracts? The answer is B. A warranty guarantees facts, while a representation is a statement to induce a contract. A warranty is a guarantee that certain facts are true, while a representation is a statement of fact made to induce another party to enter into a contract. In contract law, which of the following is true about concealment? Is it A. Concealment is always considered fraud? B. Concealment only applies to written contracts? C. Concealment involves hiding a material fact that affects the contract? Or D. Concealment is irrelevant if the other party does not ask about the fact? The answer is C. Concealment involves hiding a material fact that affects the contract. Why this question may seem a bit tricky. Concealment involves intentionally hiding a material fact, which can void a contract if it affects the decision-making of the other party. Alice sells a car to Bob, claiming it has never been in an accident, but later Bob discovers it has. What legal concept might Bob rely on to address this issue? Is it A. Misrepresentation, B. Warranty breach, C. Concealment, or D. Non-disclosure? The answer is A. Misrepresentation. Bob can rely on misrepresentation, as Alice's false statement about the car's accident history induced him to enter the contract. What is a key characteristic of an express warranty? Is it A. It is implied by law in all contracts? B. It only applies to goods, not services? C. It is a promise of future performance? Or D. It is explicitly stated in the contract? The answer is D. It is explicitly stated in the contract. An express warranty is explicitly stated either in writing or verbally and guarantees specific facts or conditions. John buys a house from Sarah, who assures him there are no structural issues. After moving in, John finds significant foundation problems. What legal action can John take based on Sarah's assurance? Is it A. Breach of warranty, B. Misrepresentation, C. Concealment, or D. Non-disclosure? The answer is B. Misrepresentation. John can claim misrepresentation as Sarah's assurance about the house's condition was false and induced him to buy. Tom sells a used laptop to Jerry, assuring him it has no hardware issues. After a week, Jerry discovers the battery is faulty. What legal concept might Jerry use to address this issue? Is it A. Express warranty, B. Concealment, C. Misrepresentation, or D. Implied warranty? The answer is C. Misrepresentation. Jerry might rely on the concept of misrepresentation as Tom's assurance about the laptop's condition was false, leading Jerry to make the purchase.
Thanks for watching. If you found this exam review helpful, be sure to subscribe for more real-world practice and topic-focused study videos. And visit Birdsy.ai to start your free trial of Birdsy, your AI-powered study partner.